Amazing now that the two superpowers have reached a partial trade deal. George C. Annandale Capital CEO joins us now. Good morning, George. Now, this trade deal is positive for both economies, but our investors right now, are they overestimating the impact of this trade truce? December tariffs still not called off. We still have a lot of uncertainty. We don't even know where this trade deal could be in a year or so. What do you think?
It's better than nothing. It's a sugar high for the near term, but a handshake is something, but they haven't inked it yet. So I think it's a long way off in terms of what the impact's going to be. But the markets will celebrate for a short time at least.
Okay. Speaking of celebrating, the yield curve no longer inverted following Friday's rally in the bond market. It is a clear sign that maybe worries of a recession are subsiding a little bit, at least for now, after we do have that trade deal. What are your thoughts there looking at that?
Fear and greed are two very heavy influences on investors, and people were too fearful of recession, just like they're too fearful about the impact of the trade war. So I think that the yield curve is reflecting that those fears are coming off the table a little bit as we get ready for a Santa Claus rally going into year end.
Really? So you're thinking a Santa Claus rally here?
I'd give it better than 50-50. But the unease in the Middle East and the tension between the U.S. and Iran may scotch that. We'll have to wait and see.
Okay. So earnings starting off again this week. We have big banks reporting. What do you think the impact of the Fed's recent rate cut is going to be there? What are you looking at? What are you watching for this earnings season this time around?
Well, I'd hate to be a banker these days. They're in the crosshairs of every Democratic presidential candidate, and their margins are being squeezed with all these rate cuts, and the government regulations are on them all the time. So I think that big banks, although a value right now, it's a pretty poor short-term play, but hopefully a better long-term play for investors and banks.
So what do you think? Will the Fed cut rates once again this year?
I'd give it more than 50-50, and they certainly should do so, but there's enough hawks on the Fed to where that's not a certainty. There's a lot of tension and debate going on about that, but they really should cut. They need to cut.
Yeah. All righty. Thank you very much, George C. Lauren, over to you.
All right, so let's take a look at futures.